Today we saw a major shift in one of the most important businesses that's not available for trading. I'm talking about the NFL.
Sources have confirmed with me is that the NFL is going to approve private equity investing.
Owners have just voted to approve a rule allowing a portion of NFL franchises to be sold to private equity firms.
In late August, for the first time ever, the most profitable sports league in the world joined other major American sports leagues in allowing private equity investing in its teams.
You're literally in the first inning, second inning of sports. This is like literally a $1 trillion industry when you take a look at all the different subsets. So I think it's a massive opportunity. I think for the next 10 years, this is where you want to be.
The whole media TV landscape is shaken up because of streaming coming in. And the only thing that seems to be safe from all of that upheaval has been sports. Viewers are still showing up, whether it's streaming or linear regular TV. And there's just a ton of money there. So it's made it a very attractive investment for private equity.
Major League Baseball in 2019, Major League Soccer in 2020, and the National Hockey League in 2021 all allowed their teams to sell minority stakes to private equity before the National Football League's announcement in late August.
After viewing how private equity was investing in those leagues, which have limits up to 30% private equity investment, the NFL said, okay, we'll allow a little bit in, we'll put our toe in the ocean, see how it works.
It also has very different minimum dollar requirements than other leagues. While the minimum investment in an MLS club is $20 million, the minimum in an NFL team is 3% of that franchise's valuation. The average NFL team is valued at $6.49 billion. That's almost $200 million.
Frankly, the private equity firms really want to get into the NFL. It's the gold standard. It's where they really want to be. So the ones that are in had to accept these different terms in order to be able to participate.
So far, 4 investment firms have been approved for initial investing in teams, flushing them with an expected $12 billion. The money can be used for anything like stadium projects or facility upgrades, and 3/4 of NFL owners have to approve the stake sale before it's signed.
So it's sort of like having a pool of capital of faceless investors that allow us to grow and build our asset.
That capital can be used for a lot of purposes. I think most importantly, it'll give teams that are considering new stadiums or renovated stadiums an opportunity to access a capital pool that they haven't had access to in the past.
It's an interesting concept. I haven't really followed too much on private equity in sports. Predominantly, this has all been like privately owned and usually by like small number of people having large stakes in them in a variety of spaces. So presumably they're setting up these guardrails because they're worried about what this can do to these sports teams. And that's why they're limiting how much investment can go in. But at the end of the day, all these people want to make money. If you're owner of a sports team, it's an investment for you like any other investment. I'm sure some people are interested in the sport, which is why they do it, which is where like for some people who invest is probably a strong word, in Bitcoin, it's because they have some inclination towards that. Maybe they're interested in technology. Maybe they feel like they want to look ahead to the future to new things that are possible, and they have an inclination towards it. And so they would like to put their money somewhere and they put it there. And so I would expect these owners to be interested in the sports space. But at the end of the day, they're mostly there to be generating a profit, like any other business. And so this really just allows them to expand where they can get funding from. And likely this will inflate or increase the valuations of these companies, especially as there will be some form of competition to try to get ownership or partial ownership, since there is a limitation there. And it opens it up to more folks. So likely that's what they're expecting, is that there's going to be a lot more money coming in, and that's going to impact it. But they're probably also hesitant of what investors could do towards these teams and these stadiums if they get too much control of it. We've seen in some other companies where if you go too hyper-focused on profitability, you can start to forego things that are good for you in the long term, like research and development. And getting rid of those activities makes your present seem better financially, but then it sets you up to fall behind in other areas as you progress. But this could also materialize in other ways. This could be like increased monetization methods for these sports, for instance, where maybe they're trying to charge people for more things or charge more for those things that they have access to today that they wouldn't have had previously. So we'll see what they have to say on this topic.
Low investment threshold will keep investment firms as minority stakeholders with no voting power, decision-making, or governance.
The only way they were going to allow institutional capital in was if the decision-making process remained as it has been, that there would be no pressure on control owners or their families to alter the way and the type of decisions that they make.
That's far from how private equity generally operates.
Typically in our private equity strategy, there's an outcome. It's getting board seats, it's seeing management change, or it's dividends, or it's a specific time period to exit and get that return. That is not what is happening in sports.
Private equity in sports really started in Europe when 3 private equity funds bought majority stake in famed soccer team Paris Saint-Germain in 2006. In the US, the MLB was the first to allow institutional investment. Today, 18 of 30 MLB teams have accepted private equity. The league's franchises have grown 35% between 2019 and 2024.
In the United States, we had baseball teams that had serious liquidity problems, and some of those were solved by the investments of private equity.
PE firm Arctos, which launched in 2020, is one of the most active players in the sports investment class. It holds minority stakes in the Houston Astros, the Sacramento Kings, the San Francisco Giants, the Utah Jazz, Boston Red Sox, San Diego Padres, and the New Jersey Devils, among others. Arctos recently closed its second sports fund valued at $4.1 billion, which includes investment from pension funds, retirement systems, endowments, insurance companies, family offices, and global wealth platforms. Each of the 6 baseball teams they hold stakes in will be or have already renovated their stadiums. Only the Astros are issuing bonds to complete their $20 million renovations. 20 of the NBA's 30 teams have ties to institutional capital. The average basketball team is worth $4.4 billion. That's up 15% compared to 2023.
A lot of teams in the NBA, more than people might realize, have been in a cash loss position every year. Some in a 9-figure cash loss position, significant amount. But the valuations have increased much more than that. And so they've been able to avoid capital calls in some cases by selling shares to private equity firms. So it has been a way to create liquidity without having to borrow money and without having to do capital calls.
In July 2021, Blue Owl's Dial Home Court Fund bought a stake in the Phoenix Suns at a $1.5 billion valuation. 2 years later, it sold its share to the Ishbia brothers in 2023 at a $4 billion valuation.
That's actually a pretty impressive turnaround to go from 1.5 to 4 billion. That is definitely a lot of money, which certainly shows the potential in this space and why institutional investors would want to get a piece of the pie, so to speak. So definitely this is going to push up valuations. I think they were sort of hinting to this earlier. That's not really how private equity works, of just kind of being off to the side. And I also think it would be pretty hard to stay completely neutral when somebody owns hundreds of millions of dollars in your organization, one way or the other. Because they can always choose to leave at a bad time for you. They'll always have some leverage. Maybe they could get in the way of future deals getting made, etc. And so they will almost certainly have some sway over the group. And it seems to be something that they're cautious of already.
A 158% return in just 18 months.
Primarily, the way private equity money has impacted the NBA is it's helped pushed up the value of teams. Because when you have a greater interest, in other words, you have a greater supply of investors and more money looking to buy an asset, but the supply of assets remains unchanged. There are still only 30 teams in the NBA. It's going to push up prices.
The National Women's Soccer League is an outlier amongst its peer sports leagues in that it allowed private equity firms to own majority controlling shares in teams. Bay FC owner Sixth Street is also one of the approved funds for the NFL. Sixth Street CEO Alan Waxman serves on the NWSL Board of Governors and even led
So that's interesting on how they were describing kind of the short supply of teams. I was just thinking about how this could potentially encourage leagues to introduce new teams. Like if you knew you could introduce a new team and start adding billions of dollars that you could maybe take a piece of, certainly there would be some encouragement to do so. It sounds like they're potentially going down another path, which is looking into sports that aren't as monetized, like the women's teams in this case in the US.
The consortium that launched BayFC from scratch, investing $125 million and then a $53 million expansion fee. It sold out its first home game in 2024 with a record high 18,000 attendees.
Usually with private equity, there's a specific time and way of getting out of a deal. There's an exit strategy. There's a return on investment. This is not at all traditional in that sense, but yet people want to be in it.
Private equity investment in sports does come with some inherent risks, one being an increase in the role of the funds. The NFL said itself in an announcement. The league long resisted PE's involvement partly due to the fear of misaligned incentives. The NFL wants what's best for its teams, fans, and the sport in general. The league has always remained staunch about its focus on heritage, community, and reputation. That hasn't always been the case for private equity, known for its laser focus on financial return by deep cost-cutting and maximizing revenue.
We have the very tight rules that we have in the NFL. Having individuals be able to come in and invest is difficult. So it's a perfect addition, and limiting the investment to 10% is a way to keep it under control from our point of view.
I think over time you'll definitely see the percentage of private equity money that it's allowed to go into a team increase.
NFL ownership is kept to a very select few billionaires, making every effort to keep controversies to a minimum. Now the league is exposed to outsiders.
Do any of the private equity firms get in trouble? Do they get into political trouble? Are they going to be boycotted for investments like we've seen them boycotted in investments in oil or in certain countries in the world? These are just things that the NFL's not had to deal with because of its pristine ownership rules.
The selection process of the approved funds was extremely secretive. It remains to be seen if the league decides to expand the pool of investors, adding another layer of risk.
I do think the league will continue to allow other forms of investment, whether it's more private equity, other types of institutional investment, perhaps allowing some foreign ownership down the road, because all the sports leagues, but in particular the NFL, has huge interest from overseas investors.
Thank you for watching. If you enjoyed what you saw, please hit like or subscribe. I will see you around.